We're going to go over the valuations according to my high five snapshot. We're going to look at some charts, and we're going to quickly give a brief overview. Buckle up and let's get into it. Snowflake, I did a thread on this one on my X account as well. And I just believe, as I said here, the AI data king that could 10x your portfolio. This could be the next $1 trillion market cap company. I mean, they just have so much opportunity in the data field. They really are a leader in this space, and they really are carving out a big fat moat and in this data space, and it's something that is going to continuously be needed more and more as things grow. If you have an iPhone or you have any Apple product or computer or whatever, you understand that it always seems like, oh man, I gotta pay this extra money so I get this extra storage, blah blah blah. And that is where we're going over time in life. The more that technology advances, the more data that's going to be needed, and the more data that's going to be needed, the more companies are going to need to lean on Snowflake and really have somebody to process and hold that data and give them the best usage out of that data. Data is king, and data is going to only grow long term. There's no AI strategy without a data strategy. 1000%. We can see the unified data all architectures. We have the data warehouse, the data lake house, kind of like their little wheelhouse here. Semi-structured, structured, cloud on-prem, open formats, and unstructured data lake and data mesh fabrics. These are all the partner ecosystem that they're dealing with: AWS, Cognizant, Twilio. Just picking out names that I really know. Let's see. Merkle, Wiz. Wiz was just acquired by Google, actually. Salesforce, Microsoft, NVIDIA, the Trade Desk. I mean, you have so many large companies using the products that that Snowflake has. Their recent earnings, I mean, they absolutely crushed their recent earnings, which is why you had such an outsized move after their earnings. A 26% year-over-year revenue growth to almost $1 billion. Net revenue retention rate of 124%. 11,578 customers. Just continue to grow that, almost 20% growth year-over-year. $1 million plus in customers. Forbes Global 2,000 customers. Snowflake Marketplace listings. AI ML adoption 5,200 plus. Just a little sneak peek of AI Data Cloud, data engineering, analytics, AI, and application and collaboration. Fully managed cross-cloud, interoperable, and secure and governed. AI data. This is a crazy graphic, guys. So April 2020, the AI Data Cloud growth. This was all their growth, as you can see there, and it's just exploded. It's just exploded 5 years later, and you could just see how much, it's like you had this little sliver right here, and now it's just completely filling up in the AI Data Cloud. And you can kind of see some more infographics here. Again, if you want to read this whole thread and go through it all, you can go visit me on my X at the RonnieV show. Moving on back to our high five snapshot, we have a massive 34% margin of safety. Currently, we're $210.84, and people are sitting there like, oh my gosh, we've already ran so much. I wish I could have bought in at 130, 140 when the stock was down there. Blah, blah, blah. When you are an investor, you need to think about the long term. I understand nobody wants to buy the top. I understand that you don't want to buy and then it goes 20, 30% against you. But when you really think about it and you understand that you don't just go all in a stock as soon as you buy it, you either dollar cost average or you use something like a strategy like mine, which I buy based on margin of safety. I buy my first 10% or I buy my first 20%. 10% at 20% margin of safety, and then I gradually increase until I get to 100% portfolio allocation at 50% margin of safety, because typically you're not going to get more than 50% margin of safety. And it's just one of those things you just have to understand and overcome and just become okay with not buying the bottom. I bought Meta and I made 300 or 400% gains on Meta, buy or more than that, buying them, in the hundreds and even sub 100. I didn't buy them exactly at $86 or whatever in 2022, 2023 when they bottomed out. But I kept buying Meta because I knew that it was very undervalued. I was right on my position for a while, and then finally we corrected and went back up and just made massive gains. You got to have that conviction, and you got to understand that you got to continue to buy the stocks that you love, and you're not just going to get that instant gratification. You're not just going to get that instant reward for buying. Sometimes it's going to go massively against you. Sometimes 10, 20, 30, 50% against you. And you just have to realize that, okay, I'm not going to buy all in. I'm just going to continue to DCA, or I'm going to buy based on margin of safety. I'm going to have some sort of strategy for why and how I'm going to buy this stock and continue to do so, while also continuously having cash flow coming in your house, coming into your bank account that you can continuously bring over into your brokerage to continue to buy stocks. This is the flywheel effect, that if you continue to do this flywheel, you will achieve your financial goals consistently in a good time bound, in a good time frame. Okay. So it's just a flywheel effect. You analyze businesses and you understand that cash flow is king and cash flow is the lifeblood of a company, but then you won't do it for yourself. You won't manage your own budget. You won't make sure that you're cutting back on unnecessary costs. You won't make sure that you have free cash flow coming in and consistently going into your brokerage's account so you have money to spend. Why are you willing to, and I'm sorry I'm going on a rant here, but why are you willing to look into a company and analyze a company, but you're not willing to analyze your own company? You're not willing to analyze you and your family and your own income and your own expenses. You first need to analyze yourself and your expenses and your money before you could ever analyze another company's money, cash flow, whatever. And especially if you're going to criticize them, you need to have your own house in order before you're able to criticize another house, right? Sorry about the little rant there, but I thought that was really, really important to say that because, it's something I see time and time again, right? And it's something that if you want to achieve your financial goals, it's definitely something that you need to continuously do. Now, so with Snowflake, yeah, the free cash flow is the best. Free cash flow and EPS is the best way to really realize the undervaluation with this company, because you are getting 20% growth for as far as the eye can see. I already told you that data is king. Data is data, and it's going to continue to grow in the future. The TAM is absolutely enormous, and that means you're going to have 20% growth for into the considerable future, right? And as such means you're going to have to pay more for this company. Okay? Look at Palantir. You have to pay out the butt for Palantir because they have such massive growth. They have 30% growth, okay? So yes, the PE does not look that great. Sorry, the PE doesn't look great at all. The free cash flow yield, it's okay. It's not below 1, but it's still below 2. So I'll give it a meh score. But really, what I really like to look at is that free cash flow, which they have a good amount of free cash flow, hitting $1 billion in free cash flow right now. They need to get this stock-based compensation under control, though, because they have basically, you know, $500 million over their free cash flow compensation. So that's just in stock-based compensation. I just don't like that very much. They do have $1.7 billion in net cash over net debt. So that's really good. And going off the free cash flow, 34% margin of safety, $318 fair value, a little over $100 per share from where we are at right now, a $70 billion market cap. Again, a $70 billion market cap. I do believe that this could grow into a $500 billion to $1 trillion market cap. So you're clearly, obviously looking at a 5 to 10x if they were able to do those two things. And on the EPS side of things, they were going to become more profitable as they continue to grow and kind of get those finances in order. And like I said, just a massive growth opportunity, growing to between $520 and $823 per share, either based off DCF model or the EPS model. So getting around a 10 to 15% annual CAGR is really good. It's definitely could be better, but it's definitely a spot that I don't mind paying for this company, paying a little bit more just because of the amount of growth rate that they are going to continuously have. That was number three. Going to their chart real quick, Snowflake, we can see that, the chart, the monthly chart is absolutely lining up, guys. Since inception, they've built, this massive, massive inverse head and shoulder, or yeah, inverse head and shoulders. They have broken out of this. I have leaps on this name due to this very reason. We've swung just like we always do the pendulum with the wins percentage range. We swung down to the green barrier, and now we are swinging and we are at the red barrier. Now, what we need to do to get this move to continuously go up, well, you already have a lot of probabilities on your side. Massive volume shelf, you're launching off that. Massive inverse head and shoulders, you broke out of that. You could come back and get a retest, but you're already breaking out of that. So you either retest then go, or you just continue to go and you don't retest. And third, we have the pendulum that swung from green to red. We're in bullish territory. Now what we need to see is a Williams consolidation box form. Stay within this like we saw in the other charts. And as long as we do that, this name will climb over the next few years and we will all make a lot of money. At least a double up into 400 plus from where we are right now at $210.84, which is massive gains and a massive opportunity for this name. And this measured move, obviously, yes, is $495.96 per share.